There's so much money to be made if you know what to look out for. And in this video, I'm going to show you and the trades that we took together in the Discord server. I also provide a live analysis. You can just click on the links and you can be directed to that analysis when we took that trade. Now, trade 7 is really interesting as well, so stay tuned for that because it's meant to provide you with no loss until the end of the day and with some profits at the start of the next day and good rewards. So look out for that. So Discord members, please don't forget to review every day so that you can get better in your trade entries. And today I am also going to show you my trade entries and how to be better and entering your trades and how to increase your profits in a trend like that. Now, firstly, the trade number 1, when we saw Gravestone Doji that's formed right here at about 9:42, we saw a Gravestone Doji that was forming at the 5 minutes chart right here, and we decided to take a trade off of orange here. Now here's my entries for that trade. First trade right here, right, entered at 9:42, and I saw the Gravestone Doji, stops at orange. Took quick profits because this is an early candle trade, so you cannot be holding up for too long. If the trade works well, you can always add on your position later, so there's no need to be holding on for runners for too long in the early candles of the trade. Next up, trade number 2, we saw a possible head and shoulders formation right here. Now, second trade, it was quite straightforward here. We saw a possible rejection of orange again, a head and shoulders pattern with a very clear neckline. Now, this is a perfect structure, really nice structure here. And not only that, the Qs also formed a 5-minute Gravestone Doji, and orange was defended as well. So let's take a look at the Qs at the time. Now, the Qs also form a very nice Gravestone Doji right here. Very strong rejection of this top level here. Now, when that happens, you have some time to manage your trades because you know that this level here will be defended by sellers quite aggressively, and this was when you can just wait for a good entry before entering at orange. Now, for this trade here, it's not that easy to take because of how choppy the situation is. Now, you have to appreciate this is very choppy action. Now, if you were to be measuring how much, now this is just less than 1 point move, but over about half an hour's time, so this is actually really choppy action. So I would suggest that if you're a beginner trader, if you're not really that good in scalping or getting into positions or not practice in your stop loss, do practice it while paper trading, or you want to wait for the bigger moves ahead. Now, the big move was here, which I'm going to cover it later, but let me just run through this trade. So these are my entries, and you noticed one thing, right, that I bought at 472, but why did I sell it at 474? Right, were my stop losses so tight? So right here was my entry. I entered here, right, and this red candle here, once it broke through this orange, because I was looking for some sort of head and shoulder structure for orange to be resisted, and the chart went down ahead. Now, at this point here, there are 2 things I can do. I can take partial profits here as the structure demands, which, to be honest, I was a little late for that. But when the chart moved down, I have to ensure that my structure is protected. So in this case, I had to move my stops down, because if orange was broken through in this case, then this structure does not hold. Now, it's absolutely all right to get stopped out early, right? Even if I was stopped out early, now this was a break-even trade, but you realized I re-entered the trade again at a lower price. So there's no problem to get stopped out early if you can re-enter at a lower price. And in this case, I re-entered lower price, but I got stopped out again, right, because of this wick here. But yet this wick gave us the conviction that there was going to be a very strong resistance at orange, and it formed another very nice choppy right shoulder here, and this was where I re-entered into my trades again. and managed to get my profits by this. Now, this was a profitable trade, but I entered it 3 times before I got into it successfully. So if you can manage to appreciate the structure, know when to assess your stop loss. Now, the best case scenario actually would be to take partial profits here, protect my trade, let it chop it out, and take my profits here again once I saw some sort of rejection. That would be the best case scenario, but I didn't manage to close my partial profits in time, so I got stopped out, re-entered again, stopped out. But this wick here confirmed that structure. So it gave me the conviction to enter into the trade again. So you see, if you trade based on structure, this will give you conviction. But if you trade based on P&L, now this will stop you off the trade and you will be too afraid to re-enter again. And this is why we have to look at structure before we enter the trade. Now, this was a good trade, but not easy to take this trade, right? Now, trade number 3, right? We were waiting for a stop hunt right here. Now, you notice that this is a buying channel. We charted that buying channel here. We broke through that buying channel. It sprouted out, but it started to just flag right here. Now, this is known as an emerging sprout. Out of a buying channel, we have to look out for some sort of rejection. This is too strong coming out of the buying channel, right? It will trigger selling algorithms, and that's what I was waiting for. So I told Discord members here, we have to watch out for a possible rejection and a stop hunt right here, right? Especially when we broke out of this. So we realized that it started to flag a little bit too much, and it's good if you can get into position in this case, because we noticed there is some very strong resistance here. I can put your stop loss here. Right, we were expecting some sort of rejection and stop hunt here, especially when orange provided some strong resistance here. So I entered a trade right here. I entered a trade about 10.21 here. I got into position, and this was a good trade, right? I entered into more positions after which, right, you can see here, I entered into more positions as we got more confirmation. I added more positions here once we broke through orange. And I added even more positions here once we maintained and broke through orange here again and here again. So you noticed I always buy my contracts. I add on confirmation when I have existing runners, and I always buy it at the green candles where there's some sort of retracement. So I made quite a bit of profits on this trade from this all the way down. So here's a very simple trick, right? If you take your trades here, take your partial profits, cover your positions, leave small runners, and then you add on to your runners when you see some sort of resistance here and retracement, add on to your runners. Your runners will never lose because you took it at an early position. You'll probably average up your price to be about here for your stop loss, but you notice your resistance is here now. Added on your positions, protect your trade again, leave some more small runners. You notice this orange is a good resistance. You add on to more runners, push down once again, take partial profits here. And you notice there are more runners that you can add on here, and you push all the way down. So many contracts here on the way down. Now, so this is one way you can be taking confirmations, but otherwise, if you're taking small profits, focus on entries, partial profits, and then leaving your runners to run, and then close your runners. Sometimes take decisive profits or leg out your runners along the way. So step by step, focus on your entries. That's step 1. Step 2, learn to take partial profits to protect your trade. That's step 2. Step 3, leave a runner and just take decisive profits when your runner runs out, especially when you don't have too many runners. And step 4 is to add on your trades, add on your winning positions. And so you see, it's a step-by-step process. Don't rush it. Focus on entries first, focus on partial profits first, focus on leaving runners and allowing the runners to run as long as you can while you learn to adjust stop loss. then you focus on taking more additional positions on your winning position runners. So step by step, and you can benefit from runs like that. Now, if you get stopped out, that's fine, right? Because your runners are the one that's padding your loss. You have already taken profits earlier from the trade, so your trade will never be in a losing position. So this trade number 3 and 4 were particularly good trades. Now, trade 4 especially, because we saw a head and shoulder pattern here on trade 4 right here. If you saw it, right, orange provided some sort of resistance. Again, if you take a look at a 5-minute chart, it's so much clearer, right? So sometimes you have to zoom out, and you notice, especially with the top wicks here, right? The top wicks here, orange defended that zone here, and we have a clear rejection of the orange level. And this will be important for our daily brief later on how we're going to trade today. So pay attention to that. So obviously I added in more positions here and more positions here as well. Now trade number 5 right here is a clear head and shoulder pattern, but because of these chop right here, it's not that easy to take a position, right, unless you already have existing runners or you have some clear risk rewards that you want to be taking. Look at this, right? This is just half an hour of chop. So if you're a beginner, you enter here, you probably get stopped out multiple times and you just lose your will to trade. So not all trades are worth it. In fact, I didn't recommend to take this trade, but I took it because I have existing runners here. And you notice that I entered the trade early at 12:02 and I got chopped out, right? Yeah, granted, my stop loss was only 0.5, but as I mentioned, if you see the structure that's happening, because I saw this candle here, it provided me with some confirmation of this trade, but the sellers didn't follow through, chopped me out right here. So I readjusted my stop loss to something tighter because I already see that it's possible that it's heading down quickly. So you realize that part of trading is about having quick feedback. Otherwise, I'm all right to take a small loss to get out of that position. Now, my stop losses have to be extremely tight. Now, this is only 0.05 per contract. It's important if you're taking hundreds of contracts, this will add up, right? So you have to continue to practice and get into very tight stop loss situations, especially with a good fill, and appreciating and managing risk through the structure. If I don't get quick feedback here, I rather get stopped out quickly and re-enter my trade, which you see, I re-entered it at about 12:11, and if you notice, at a better price than I previously entered, right? So at 12:11 right here, I entered at this position here, even at a better fill than I previously entered, and this was a good one. I managed to take partial profits, and I re-entered and added more positions at 12:22 when it pushed the way down, but it showed that the structure has worked. And we started to see some retracement. I added more position here as well. So that was a confirmation that I had. And you realize that I added position and the price of adding my position was less than the partial profits that I took. So it's good practice sometimes if you can appreciate the price structure in that case. And I took profits, and my last one was actually a stop loss. I allowed it to stop it out, right? So adding positions to your winning trade really helps, but it helps when you have additional runners that's running. So when you see that I'm adding position, I actually have existing runners and I just averaged up the price of my runners, but you realize that I'm always entering lower than the price that I took partial profits from. So it's always a good trade. So a few things you have to learn from this. The first thing is it's okay to get stopped out early. Always trade off structure. If I don't get quick feedback, I don't want to be caught in this chop. I'd rather get stopped out early. I'd re-enter later, and my re-entry can actually be even at a better price. Take partial profits to protect the trade as always, and I protected my trade, right? And you notice, take partial profits to protect your trade decisively as the structure demands, right? So once this red candle pushes down, I took my partial profits. And when it started retracing a little bit and I noticed some weakness, I took more confirmation at a lower price than the partial profits that I took. And this was a good trade as well, right? Managed to benefit from the entire move. Now, the next trade we took here was a little retracement here. It was just trying to target this red candle here, especially when we saw some engulfing doji, especially on the 10-minute chart right here. So bought some calls here. We were just targeting this because this was an easy way down. It'll most likely be an easy way up, especially when there was no conclusive flagging. We found strong support, and you'll notice it started forming some sort of descending wedge, and that shows that buyers have some sort of imbalance that pushed us up. Now, I took this trade as well. It was a smaller size trade here. Now, you realized, now even though this trade didn't fully materialize, right? It was just maybe a 2-point move here, right? But still managed to come out with profits here if you have good trade technique. Now, always remember, you don't have to be right in the direction that you're trading. As long as you get a good fill, you have good risk management, you will always come out profitable. Now, I'm just going to show you the number of contracts I took for this trade. Now, because we are trading in the middle of nowhere, wasn't calling out for reversal. I would have added more contracts if it were. I only took about 10 contracts for this. Got to show you the contract sizes that I took so you can see that it's still possible to make very good profits with very little loss. Take a look at the loss that I had for getting stopped out with 10 contracts, right? So even if the trade didn't materialize, you could still make a few $100s. So I bought some contracts here and got it in, right? I added on once it broke through the channel right here. Took my profits, and I added on more position later, added on more runners, just 5, and I got stopped out at the end when it didn't work out, right? So this is a possible trade, as I mentioned, even if it's a small scalp. Now, we were targeting this easy way down and this easy way up. So you have to always remember, trading is not about being in the right direction. Of course, that helps, right? But if you got in a good fill, if you can protect your trade partially, if you can see confirmations and enter runners and manage your risks and close with good stop losses, look at the red, even with 10 contracts. Now, you still can make good money from this. Now, this was not an easy trade to take, but it's something that we can learn together. Now, the next one and the last trade I took for the day, at trade number 7 here, I'm selling puts. Now, it's very different from taking calls, especially when we started chopping. Now, you realize from here on, we started following some sort of very slow buying channel, but we had so much rejection of the resistances and to drain off the sellers, so there was a massive chop. Now, many people were waiting for that short squeeze that we saw on Friday, but it's not going to happen every day. So I expected some sort of chop, so I sold some puts here. Now, my earlier puts got stopped out here, right? Because I was following the buying channel. Once it broke out the buying channel, I was stopped out here, but once it re-entered the channel, I resold these puts, right? Took my partial profits here to protect the trade. And at the end of it, near to yellow, I sold some calls here so that I had a straddle in this case, so I would always benefit from the time decay overnight. Now, getting into trades like this, especially in the chop, it's very helpful because once I get into a strangle position here, my risks is completely reduced. Now, I still run some risks if either of these puts or calls go in the money, very, very deep in the money, and the other leg goes absolutely worthless. So when you're selling options, you have to always remember that your losses, your potential loss is unlimited. If one of the legs go so deep in the money, it renders your other leg worthless. So when you're selling options or doing credit spreads, you have to remember there are some risks involved. Now, basically, the two biggest risks are your assignment risks as well as the potential unlimited loss, right? So you have to understand what you're doing. You can potentially have an unlimited loss. Unlike buying options, when you are buying options, your losses are defined by the price of the options that you bought. As long as your options go worthless, that's the maximum loss that you can incur. So even though I opened a strangle, I reduced my possible risks, but there still is a potential for unlimited loss. There is still a potential. You have to appreciate and understand that. So even though when I take trades like that, you have to remember, don't overdo it, especially if you're doing it overnight. And with Powell speaking at 7:15 a.m. Eastern time later, there always will be some risk. And this is why I took some partial profits first, and I opened it only with about a 3-point gap in between, a 2.5 to 3-point gap in between. So I'm assured some of the profits in between instead of opening a straddle at the same location. So you see, this is the way that I reduce my risk for this trade. Now, what's the benefit of this trade? Firstly, when you sell a contract here, you're expecting a chop. And so this is a way of telling my mind to stop trading. So even though the market is still live, I have a trade open and I will not fear of missing out of a trade because I got my position in and it's a protected position, as well as getting ready for the next day where I can benefit from the time decay. So once again, I'm risking maybe $20, $30 for a possible $200 overnight per contract pair of calls and puts. So it's a good trading tactic to do about it. The risk is not that much. However, you have to understand that the potential loss can be unlimited. So you have to know your risks before you start selling options. Now, the margin requirements are also much higher. This is an advanced technique. You must know what you're doing with this. Right, so that was the last trade of the day. So in summary, if you need to learn something from this trade, know that as you day trade, it is a 4-step process. Take it step by step. If you only can open one contract, you focus on getting the right entries. When you can get the right entries, and in this case, I think the perfect entry for today was this, head and shoulder pattern here, this would have been a great trade. You will learn how to develop patience, to wait for quality setups, and you will know how to get into a good trade, practice a good fill. So that's step 1. You need to focus on your entries. So even if you have just one contract, just focus on entries, right? The second thing you need to learn to do is to take decisive profits. That's the second step, right? The profits will come later. Don't worry about it, but you have to take decisive profits first. Now, this will condition you and develop into a habit of protecting your trade. So as you learn to protect your trade, you will always ensure that you will never lose. So condition yourself, make it a good habit. Now, the third thing, after you mastered this too, right? Now, when you do step 1 and 2, don't think about the profits. The profits will come later if you master these 2 steps. Step 3, you leave a runner. Now, when you leave a runner, you will learn and you will appreciate how to leave the runner for as long as possible. You will learn how to do trailing stops. You will learn how to take decisive profits again. And this comes with step 2, right? Because once you have learned how to do step 2, once you're conditioned to know that it's all right to just take money off the market and go enjoy your day, then you will never have a runner, profitable runner, that becomes a loser just because you don't take profits or you don't set trailing stops. So it's very important, once you leave a runner, you learn how to manage the runners. And only after these 3 steps, then you add on to your winning positions. That's the next thing and last thing you have to learn. So just like how I took this trade here, I added on so many winning positions on top of my runners. But if you can't and you don't learn how to manage your runners and you add on winning positions without stop loss or without a profit target, you're just adding on to losing positions. If you don't know how to manage your runners, so always remember, if you cannot manage your runners and they were winners and you made them into losers, then manage this first. Manage step 3 first before you add on to winning positions, right? So trading is very simple. You have to ensure that you first never lose. Once you can ensure you will never lose, this is the only way you can scale up. And when you can scale up, then you will think about winning more. So don't think about winning more first until you can ensure you can never lose. Now, case in point, once again, look at how tight my stop loss is, right? Now, if you want to be taking hundreds of contracts, this is what you need to do. But it takes time, right? You start with 2 contracts, you start with 4 contracts, you start with 10 contracts. This adds up, right? So you have to learn to manage your stop loss. My stop loss is always preset at 35 per contract. This is to prevent a volume spike that will stop me out immediately. Ensure that my trades will always have a stop. I always almost adjust this immediately after I open a trade, right? So once your trade is open, you readjust your stops according to the structure. Now it takes some sort of experience and practice to know how much you need to, right? Even times I get stopped out, right? Look how tight this stop is. I get stopped out too. So sometimes, it happens. You just have to practice. There's no perfect way of getting this done. It just comes with practice and experience. So you have to continue practice paper trade if you need to, and most importantly, find a broker that gives you a good spread. So now let's take a look at today. Now the most important thing today that we need to pay attention to is at 7:15 a.m. Eastern Time, Powell is going to give a prepared speech. So that will certainly be some sort of catalyst event. Pre-market, we will see how that turns out before we start planning our trades. Now remember, we're looking out for some sort of trading range, right? And we were also trying to see if this doji here is being protected. So we see that the low of day then was still being protected, and we're trying to find some sort of support. Now, have we found this support? Now, today we will find out about that. Now, yesterday at the orange level, we were stop hunted. Now, this was a very classic head and shoulder pattern, right? So this was actually quite important. So this actually tells us that this orange level is a very important resistance that we want to pay attention to today. Now, if the market opens below this, this should be some sort of resistance. We want to pay attention to that. So we want to be paying attention to this orange level today. Very, very important, whether the sellers are ready to start selling again and rejecting this level. Now, this is a clear rejection. So we have to pay attention to this today, whether this level will still be rejected. Now, we want to also see a possible buying channel that is formed, right? You see yesterday and the day before, it was all selling channel. It's just a macro selling. Now, possible that we form some sort of buying channel at the end of the day. We want to see if it continues today, some sort of buying channel to break out of this macro selling channel. Now we still may be in this selling channel if we open near this orange and yellow level that we saw this rejection. Look, this is such a beautiful rejection here, right? Forming that head and shoulder pattern, right? So this is a clear rejection. How far acceptably can the bulls run? Now the bulls obviously can run up to 370 here. It's a possible range here. In fact, they can even close the gap here before the bears push it down again. So the bulls actually have quite some provision up to this 374 yellow here. As I mentioned in yesterday's daily brief, they can always close the gap, and still the bears can still be in position to push us down. So pay attention to this 374 yellow here. This is going to be a very important level. Now pay attention to this 368, which was rejected yesterday as well. So once again, pay attention to the resistances. Now we want to continue to see a selling channel being formed, even though we see a buying channel within the selling channel. So we may see that this support here is being protected, and we want to try to find the equilibrium between the buyers and the sellers, and where will the trading range be. Now currently, you see that our trading range between the past 2 days has been this range here. Now we see the rejection of this orange level 2 times. So today we want to see we have a rejection here. And remember this pattern that I talked about, right? This W pattern, and we want to see if it forms this M pattern. Right here we have a double top right here. So that's something we want to pay attention to. But however, you see right now, we have a possible W pattern here. Do we see a triple top to push us down here? So this we have to pay attention to today. It's very important, this level here. Now, if we do form a double bottom here, right, and it pushes us up here, we can possibly close this gap here, and we will have another resistance here that pushes us down. So that's also absolutely possible. So allow the possibility for bulls to at least cover this gap here. It's a possibility today, right? As I mentioned, we have a defended support level here. RSI is relatively oversold here, and we start to see that this selling channel has started tapering, right? We take a look at the 30-minute chart, right? It was a stronger selling channel here, and we started tapering here, right? We may start to form a cup. I think we already formed a cup here, right? Take a look at the 10 minutes chart here. Well, not exactly, but we're pre-market like this now, maybe, right? So we have to pay attention to see whether we continue to trade above this yellow here. Do we form the support of this yellow here as well? So it really depends a lot on when we open and what Powell says at 7:15 and how the market will react. But how are we going to prepare for that, right? Possible triple top here. Do we get a third rejection here today? So this orange level here, I'll be looking out for structures here, 100%, right? If we do form a double bottom here, we push ourselves out here, I want to be seeing some structure that will push us out of this range here and to cover this gap here where we have the next resistance here. So at this resistance here, I'll be looking out for some structure that will bring us down again. Now, if we revisit this, right, we will possibly form an M here. I don't think we will have a triple bottom. I think this will be in trouble because the resistances are just too strong, because we are in the dominant selling formation right here now. So if we do revisit this again, I don't think I will be looking out for reversals here. Maybe looking out for ways to take puts to cover the way down. I think we'll go lower if we retest it again. So quite straightforward today, right? Most important thing about day trading: focus on your entries, focus on good structure, focus on being patient for taking trades. Now you notice one day we just need 3 good trades, right? The good trade actually was here. That's it. That's just one good trade here, and you're done for the day. Maybe you take another trade here, 2 trades, you're done for the day, right? That's as good as it gets. But of course, sometimes you want to scalp early. So I took about 7 trades on that day. That's fine. It's still a good number, right? But otherwise, you notice 2 to 3 good trades. That's all you need. So be patient. Remember the 4 steps in order to scale up and get good profits, and pay attention to what to expect today. So thank you very much for watching. I'll see you closer to opening bell. Thank you very much.